In this video, we're going to be analyzing Carvana, ticker CVNA. If you want your own stock analyzed, throw that in the comments. We'll get around to it when we can. Now, to get straight into it, we're sitting around $15. We're currently at $14.87, and we are up 15% on the day. So what are key levels we'll be paying attention to from here? So for this, we will go straight onto a standard deviation channel chart, because this is where we can find the key levels. Now we are starting to become a bit overbought on the 6-month time frame. Again, this is our first deviation. Usually the range between your first deviations, and again, if you understand standard deviations, you know about 68% of the data should trade within this range here. So what it does mean is obviously you will have some data that trades outside of it, but that's why we don't tend to trade this first level here, because it's not a super high probability. Yes, it's over 50%, but still not a massive one. The main focus is once we can start continuing to push up, and we can push to this second deviation around $19, because on the second deviation, that is a 95% data should trade within that range. So again, a lot more of a high probability that we start to reverse coming into that level. And again, just to note, at this third deviation, that is 99.7% of the data. That's why this third deviation is always my favorite to be trading. But again, sometimes there can still be good and optimal trading opportunity coming into the second deviation. So to continue on with these levels, again, we have $19. This is our second deviation on the 6-month chart, so paying attention to that. And then you can see right above it, we have this dashed purple line. This is at $19.90. Now, why is this key? So again, you can see it's this recent high that we created here. But the way I get these levels, and what we'll do is remove everything off this chart to make it a bit more clear. We usually go on to about a max time to a kind of a 5-year time frame. 5 years usually my preference, and we can see what is happening at key levels. So again, we can get support and resistances this way too, and we can see again this level has been a very clear support and resistance in the past, hitting there, bouncing there, again bounce there. And then you get the retest. Once we started this downtrend, we came back to retest this and then sold off. And then again, we got that recent kind of move created there. So to me, this level is being hit a lot. It is very key. We do keep retracing back to this level. So I like to be paying attention to this level if we can start pushing towards it. So to go back to our standard deviation channel chart, just wanted to point that out. Again, this range to me is going to be key, and once we come into this range, I'm going to turn very short bias on Carvana, looking to trade it short. Now, if we do break higher, we do have more resistances. $25 again, going to be another key level because it's our third deviation on the 6-month. And again, we said, what's a third deviation? 99.7% of the data should trade within those green lines. And again, that is also our second deviation on the 1 year. So basically, the resistances on top of each other gonna show great strength. Most likely will be a reversal zone if we come that high. Now, don't really want to put many resistances past here because we are at $15 now. That requires near or just under our 100% move to already get to that level. So our main focus is going to be on this range of resistance around that $19 to $20 level. And then if we do break that around just under $26 as that next resistance. So those are the key levels. And again, why am I more short bias on this stock? Firstly, because we are becoming overbought. And again, when we're overbought, I'm more of a reversal trader. So I prefer to short the overboughts, buy the oversolds, and that's more how I trade. But again, what we can also see coming into these levels is, again, there's just major levels for resistances, but also on the 6-month chart, we are downtrending. On the 1-year chart, we are downtrending. Whenever we see this, I want to be following the trend, and if both the shorter and longer term trend are downtrending, I want to be joining that queue and catching it short bias at key levels, which in this case, again, $19 to $20. Going to be that key range of resistance. Again, multiple ways we can trade this: short the shares, buy calls to hedge the risk, do some vertical spreads, buy some outright puts, or again, if maybe you're a risky trader, just outright shorting shares. But again, I personally never something I do unless it's a day trade. If I'm swinging it, I'm always hedging that risk, defining that risk with calls. But again, those are the key levels. If we start pulling back though from this level, what are key supports? We have $12.20. and kind of nearer to where we are now. Going on to that 1 year chart, we can see we've also got $14.20. That is our first deviation on the 1 year. You can see we're kind of hitting that today. But again, today's not the first day we're hitting it, so I'm not paying attention as much to it. We can see we basically hit this, well, about 2-3 days back. Came into this level and we got that pullback we would normally look to. We ended up hitting our target. Again, that's the trade opportunities we look for. If we retest a level, we're likely to break, and again, that's exactly what we're seeing today. Kind of broke above it. What I would be watching for now is a retest, unless we've already had that today. We kind of have, but again, I would rather a cleaner one. If we pull back from this high, start pulling back, retesting this 14.20, and we hold again, a upper move is more likely, and again, that's when we're paying attention to that $19 level. So again, just wanted to note that those would be the supports. I would kind of be a bit more cautious considering we've already traded off that. So now my target would be, if you're holding it short, $14.20 to $12.20. And if we break even lower than this, what are going to be further off supports? And that's going to be $5.50. Now this is statistical mean on the 6 month. Your other statistical mean as it is at $2.63. This is considered fair value on a stock. So when you're buying above it, you're usually buying at an elevated price. If I'm investing, I never do this. If I'm trading, again, if I'm a trend trader, then you kind of want to be buying above this level. But from an investing or reversal standpoint, I never want to be long bias above this level, and I never want to be short bias below this level. And again, considering we're above it, to me as a reversal trader, I'm more bearish, looking to trade back to this fair value area. And again, if I'm looking to invest in this stock, never really looking to buy above that level, waiting till at least it moved back to $5.50. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.